All right, so I'm probably guessing this week has been a struggle for a lot of you guys. I will be honest, it has been a struggle for me in terms of dollar doing what I want to see, not dollar and also euro doing what I want to see do long term. So from yesterday's a lot of close live stream, so I mentioned dollar should start to sell off from the propulsion block and get down into this range bare minimum and then try to run sell side. Now that happened, right? So we saw dollar start to sell off, go into long session, continue to sell. Now this is what happened next. This, look at this. So initially on Tuesday, our initial positions was wrong, and then the re-entry was not sustained. Then the market ran into a deeper premium, and then we waited New York session yesterday, and we were able to participate on this sell. Now the problem here is I could not take any profits from yesterday, right? So my longs in euro were stopped at a break even today, which is quite unfortunate. So we are in market conditions in which the market is not seeing sustained move or moves. Now, I mentioned at the start of the week that unemployment claim number is going to be pretty important for what the market does this week if we don't see displacement between Tuesday going to Wednesday, right? So now here's the deal. If the numbers open up, we want to see the market start to run for buy side liquidity. Now, I like the idea of buying below this intraday lows here. That's I like the idea of buying below intraday lows, and I know that obviously currencies are bearish, right? So if you look at the pound just screams sells. USD CAD, I told you not to short USD CAD. I told you not to try to short this one. This would only be good for longs. Right, so USD CAD just screams absolute longs right now in the marketplace. Let me get rid of everything here. The buy side liquidity up there, USD CAD. USD CAD looks to be, I'll be honest, it looks to be very bullish. We have a run on sell side here. Alright, so all of that run on sell side in USD CAD. Now looking at the treasuries market, it is just absolutely tanking. So treasuries just absolutely tanking. I do want to see dollar be bearish. I'll be honest. I want to see dollar be bearish because my general liquidity still is on the sell side. But if you look at all the back and forth, it's not good. Let's look at gold. Gold still is not giving up. So that's the main thing I want you guys to focus on. Gold. Gold is not giving up room for downside. Right? We've seen upside in dollar. Gold is not giving up that room yet. So our criteria for being a buyer is we want to see gold show our strength and not try to sell off. So go look at gold so far. Aussie is just absolutely weak so far. This down candle, you can see the weakness in Aussie. USD CAD just massively bullish. Pound consolidation. Euro. Again, I'm still looking for that bullishness in euro. What I'm looking at in euro more specifically, and I'm willing to take a loss in this one, and I'll be done for the day if that happens. But I'm looking at the run on this low here. You can see we have a swing low on the daily time frame, right? So I like the fact that the market ran below the sell side here into the blue shadow block, right? And we still have this side here to contend with. So now what I'm looking for at unemployment claim numbers is I want to see the market trade down into this prior to the economic data, and then at the news I want to see the market go back up for buy side liquidity. All right. If we are wrong and the market starts to sell off, then this would be the one where the market would most likely want to go for buy side liquidity. All right, so if we don't get up into buy side liquidity before near close, then we could take one more leg up into buy side liquidity for USD CAD. All right, so I'm gonna have to watch this on the live stream. So this has been a week, honestly. The first live stream was a loss, the re-entry, not sustained. Yesterday's re-entry. I don't know if you guys took profits. Again, I'm being very honest. The trade I took yesterday, London close, I did not take any profits because I was thinking it was just going to carry on into unemployment claim numbers for today. Unfortunately, London sold off. New York session or London close just absolutely reversed the sells. So now I am looking for new entries long on euro. That's what I'm looking for. I know that treasuries are screaming weakness. All right, so we're seeing weakness in treasuries. That's what we can see so far. But I want you to consider is the weakness you're seeing in treasuries so far. It's not really being confirmed that much with currencies, right? So I want to see if that would sustain. Last year of the month effect, possibly. But again, I don't honestly just think it's last year of the month effect. And the reason why is if we were seeing expansion or profit release prior to today, I would say, okay, yeah, it makes sense, right? But again, honestly, it does not really make that much sense because we've been in consolidation for a while now. Since Thursday last week, it's just been back and forth consolidation. So I'm wanting to see if today would start. And when I say today, I'm looking at unemployment claim numbers and core PCE as an injection of volatility in the marketplace. So if the market for any reason does not sell off from this order block here, honestly, again, I'm more inclined to think it wants to go for buy side. And what I mentioned is I like the idea of buying below the slowdown here, aiming for buy side liquidity. All right, so I know I have my stuff down here, but I like the idea of longs below sell side and trying to go for buy side liquidity and seeing if the market would offer that at the news. I know it's weird. I'm trying to trade against order flow. So again, below sell side, good longs. Target is up here. Target one. Again, you don't necessarily need the market to get down here. Here is just an ideal entry. All right. The premise for today is I want to buy down here, and I'm looking at the wick of this candle that would invalidate my longs down here. So if the market starts to sell off. Now, not only do we have unemployment claim numbers, we also have core PCE price index, right? So if the market starts to sell off, trade lower, then I would essentially collapse in position, and you're gonna see me have a losing week. And the reason why I'm gonna have a losing week is because I took a 1 hour loss on the live stream on Tuesday. The re-entry on Tuesday, I did not take any profits. All right, so that was break even. Yesterday's forecast. I know I gave up a lot of pips, so I bought somewhere down here. I sat through all of this because I wanted that overnight run. Overnight run came and moved stops to break even. Going into New York session just now, I was stopped out at break even. So I've had to break even trades one losing trade on Tuesday, and this one's gonna be possibly winning or losing trade. So we're gonna have to see. All right. And the wonderful thing about trading is there's some weeks where, maybe weeks like this, where you're going to feel like you suck. All right. So you feel like you're not, because you did not make money that week, you feel like you suck. And what I like to say is, when you're trading, you cannot consider the possibility of you being a shitty trader, a good trader. We don't care. All right. You don't care. The market does not care. So your performance yesterday, 2 days ago, currently, you're not supposed to give a shit. I'm not supposed to give a shit. No one should give a shit about their performance until the weekend, right? The weekend is where you review your trades. And the goal is, you're not thinking in terms of, I'm a shitty trader, I'm a bad trader, I'm a good trader, I'm this, I'm that. You're not thinking at all about your performance. You're only focusing on the now, right? So what am I doing now? What am I trading now? So that's the mentality going into this trade. All right, so I've had one losing trade with like split entries, one break-even trade, another break-even trade, and potentially either a profitable trade or a losing trade. So yeah, we're going to have to see, right? But the first thing I've done is I've accepted the fact that I could lose in this trade, and that's fine by me. If I see the market start to go in my direction, then my first thought process is, how can I add to this position? All right, so I was thinking, well, the market will start rallying, and then going into New York session, I'll start to add into my position. But no, I was stopped out. Right? And initially, that can get very painful. All right, so I'm just being honest. All right, so when you get into positions like this, and you're trying to, start to think and act differently than the average trader, it can get very scary to want to look to add to your position until price gets to your target objective. But again, that's my job here. Right, so my first target 1 is up here. Now, I know this is target 1, but I'm not just going to use if the market does end up going up for target 1. This is where I want to scale up profits. Now, it all depends on timing too, right? So because of the fact that we're not seeing that much willingness, so I want to say one-sidedness on euro, excuse me, if I don't get my run up here going into long close, then that might be one of those situations where I'll collapse the bulk of my positions, right? Because this could be a week where it is just a back and forth week, and you're gonna see it so many times where the week really does nothing. It just goes back and forth. So you're going to have to learn to anticipate weeks like that, right? So if that makes sense. All right, so we are around 8 minutes prior to the news. So let's see what the market does. I am expecting the news to go up here. All right. So if it goes lower, I don't just and this is the reason why we're going along here. I don't see any reason why the market has to trade down below this low here. All right, which is a proportional look on the 1 hour time frame. And the reason for that is, if we're bullish, and again, I want you to understand the perspective, and this is why I like to preach about higher time frame perspective, contextualizing lower time frame movements, right? So if you go and look at, let me just show you what I mean, right quick. If you're going to look at treasuries are bearish, and you know the correlation between treasuries and foreign currencies. If treasuries are bearish, you want to see bearish foreign currencies, right? So it logically makes sense that if treasuries are bearish, you want to see euro be bearish. So you can see right now treasuries are bearish. 30-year treasuries is bearish. 10-year treasury is bearish. 5-year treasury is bearish. Cool. What is a correlated pair like USD CAD doing? USD CAD has been bullish so far. So we're seeing bullishness in USD CAD. So that means euro should be selling off. Aussie has seen weakness. So that means euro should be selling. So we're seeing multiple assets confirm that euro is going to be weak, right? So if euro is weak, now you know the reason why euro is weak. But now if we go and look at gold, gold is showing resilience like we talked about, right? So as long as gold stays in this bullish order block, this is where we want to see the market go up into. The reason why I'm bringing this point up is that the most important thing is high time frame analysis. That's number one, right? High time frame analysis, knowing where the daily trend liquidity is the most important thing. And then once you understand high time frame analysis, and where the general liquidity is on the higher time frame. Now the next job is to confirm, and you can only confirm through intermarket analysis. What happens when intermarket analysis goes against your technical analysis? That's where you have multiple confirmation. So right now, treasuries or interest rate is not really confirming our upside sentiment on euro. If they want to see euro be bullish, obviously currencies are not confirming them. But gold has looked to be solid so far. Now, euro, if we go out on a daily time, higher time frame, weekly time frame in euro, remember we talked about this being a long-term low forming and this being the general liquidity long-term. So we want to see price expand from here. That's the sentiment. So even if we take a loss trying to be a buyer, what I'm explaining is that's a good loss. And this is what I've explained before. There's going to be times where you would have sentiments in the marketplace and you try to trade in alignment with that sentiment and you would get stopped out. Over time, you'll refine them. But the main thing you need to understand is because you got stopped out does not mean you did the wrong thing, right? It's just maybe that was not the time for price to move, or you're trading in a lower time frame retracement, right? Which are things that could happen. Or you are in a consolidation profile. And I've mentioned consolidation profiles are mostly where I take the bulk of my losses, as you can see so far. What we're expecting now is this is Monday's trading range. This is currently Thursday. What is the difference between where we opened on Monday and where price is at currently? It's not a lot, right? So opening price on Monday is here. Current market price is here. Difference is 9 pips. All right, so that's clearly a seek and destroy profile. If the market is going to leave a dealing range seek and destroy profile, usually it takes a high impact economic release for it to do so. That's why 8:30 would tell if we are on the right side or wrong side. And if I'm wrong, I'll take a loss, and I'll be done trading for this week. So no trades for this week because I want to minimize losses. And the reason why I want to minimize losses is because I'm obviously not on the right side of the marketplace. And this is something I preach about, right? If I realize I'm not on the right side of the marketplace, because if I'm streaming every day, every week of the year, eventually it's going to catch up to me. So if I realize I'm not on the right side of the marketplace, usually what I'll do is I'll seek to reduce my exposure to the marketplace. So even if tomorrow my sentiment might be correct in price, I really don't care, right? So I know generally I'm not in sync with price, and I want to avoid situations like that. So I'll stop trading and wait for a new trading week, if that makes sense. But if the market moves in my direction and shows me I am correct, then the next thing is, can I add to this position, or do I start to scale out of this position, right? So those are things we have to consider. So we have around 5 minutes now, because we have a combination of core PCE price index and unemployment claim numbers. I think the news is gonna be very, very, very volatile. So it's gonna open up and be similar to CPI, not in the same measure as CPI. Obviously, it's not gonna just open up and have the same range as CPI or NFP. But usually, when you see combined high impact data like that, the impact can be pretty significant, right? So that's what we're looking at here. Inefficiency here. Now, typically, I would want to add to this position like this, but not before the high impact release. So if price expands and I'm correct, then I'm going to look to add before we expand out of this range. If price sells off, then obviously All right, so let's see what the feedback is, and we have a few seconds to. All right, so nice. So this is where we want to see the market expand up to, but that does not mean I'm going to take profits there. Now we have to see this candle obviously sustain. All right, so the reason why I'm going down to a 1 minute time frame is I'm looking for where I could potentially add to my positions. All right, so if I spot like a lower time frame inefficiency, I'll add half of my position on this, and I'll move my stops to underneath this low. So my entry is somewhere around here because I don't want to see the market trade below here, obviously. And when I'm going to find my stops, I'll buy this inefficiency before price gets up here. So that's what I'm explaining, the logic. Let's consider the inefficiency. The range is going to be, so we have around 10 pips to play with. .9. So essentially what I'm saying is if we trade into this fair value gap, which is a busy, I would expect the market to, it could even trade down into the week of this candle and expand because that's a balanced price range. So, but I'm not gonna buy there. I want to buy inside this busy. So let's see if it gets down into the buy sell and bounce loss and efficiency. I'll add another position on. But just to be aware, it could potentially rally from this kind of 6 week, and that to me would be strong order flow because that's a balanced price range. All right, so I just have a pyramid on, and I have a pyramided position on this. So I added a pyramid into this position, stops below here. Now, because this is a buy and bounce loss and efficiency, you want to take the entire range. All right, find the consequent encroachment of that range, and what you're doing here essentially is you're measuring order flow. You're measuring price's willingness to want to flow. Now, the problem, not the problem essentially, but if I'm wrong, my first entry is already around break even, right? So even if I'm losing in this entry here, I'm not going to lose as much as I would have lost if I took my first entry. So this is how you pyramid into a position. So if I'm going to be wrong, the market has to trade below the slowdown here. If the market trades below the slowdown here, that to me is I am not on the right side of the marketplace because it should not go past pre-news open if it's going to go for buy to liquidity. That's what I mean. Now you want to watch this inefficiency if it starts to sell off from there. That's going to be a problem for our longs. So we want to see the market trade through the inefficiency. That's what we're looking for. We don't want to see it start to sell off from here. If it starts to sell off from there, it's not good for longs. And I know some of you guys are probably watching this with fear, and that's why I'm doing this. All right, you're watching this, you're fearful. I'm teaching you cannot be fearful. All right, you can't watch price deliver with fear, only logic. So we have a plan. All right, initial entry is in profit, stops around break even. Pyramid entry stops underneath this loss. You want to add in the spread. Okay, if the market trades below that low there, you're willing to take your loss. And the good thing is, the loss is not going to be the same as your initial entry, because your initial entry was your biggest size. This entry is half of your initial entry. So even if you get stopped out, let's say you're risking 0.5% per trade. Now this entry here, if the market gets down to that entry, you're not losing full 0.5%. So if you lose this one here and you're taking a full stop on this one, you're losing 0.25% plus around break even. So you're talking more like 0.3%. So what you've done here is you're not taking a full loss. That's where we're thinking about the losing side. Now think about if the market expands for the supply side. What you've done is you've added more potential profits to your position. Right? So if let's say you're 0.5% here, 0.25% here, rather than making 1.5% here, if this is a 1 to 3, because you have a 0.25 added position here, if the market goes up here, you're now making around 2 point something% gain. So the logic behind this is, when I'm winning, I want to win a lot. I want to make a lot of money when I'm making money. When I'm losing money, I want to lose small amounts of money. So that's the logic behind adding into winning positions. Now, you cannot add to winning positions after the market has broken your parent price swing. So if this is your target on liquidity, where you expect the market to logically trade up into, even if you don't plan to take profits here, once we expand out of this, now you're no longer looking to add in more positions. You're thinking, well, how can I scale out or leave runners on? Right? So that's how you want to think. But the scariest thing is buying down here. Buying down here is scary. All right, down here, adding positions before the market has moved, that's a scary thing to do, because you could get it wrong. And that's the problem with us as humans. We avoid pain. We don't want to do the things that are painful. But that's what you're going to have to learn to do when you're trading. As a trader, confront the painful things. Confront the fact that you're going to take a loss. Confront the fact you're going to have a bad day. Confront the fact that you're going to have a bad week. Once you can confront the fact that all these things can potentially happen, they lose your power over you. They no longer have power over you. Because if you confront the fact that you could lose this trade, and if you lose this trade, you're done for the week. Guess what? If you lose this trade, you're really done for the week. Just know you're not stressed out about, this could have happened or that could have happened. You don't care what could have happened. You know you're not on the right side of the marketplace, and it's fine. And you act and trade like that. But if this ends up going here, now you feel good about adding into your position, because now this trade is now 1.5 times what you would have made, versus if you did not add into this move, if you understand what I'm saying, right? So that's where you have to learn to add into your positions, if that makes sense. So we're gonna watch this inefficiency on a 1 hour time frame. It did trade up here, and we've seen displacement here, but again, we've not lost this inefficiency, which is why our stop is below here. because of the timing of the session, right? We're already halfway through New York session. I want to see the market start to expand. So if we look at the economic calendar for today, we have 9:45 is when we have the next data, which is major impact, Chicago PMI, and then 10 a.m. we have pending home sale numbers in euro. So bullish order block, down candle. I want to see it respond in price. If it loses bullish order block, then most likely it's just gonna trade around or run out this low here. So real quick, let me take a glance at bonds rallying. Nice. All right, so let's see gold. Gold, nice rally. Euro should rally. It is stalling. I want to see a rally. All right, so gold is doing what I want to see gold do. US the CAD. This one's just selling off. You can see how very, very weird price is. The one that's been rallying all along, selling off. Drawn liquidity is down here for US CAD. Meanwhile, euro. So I like the way we've closed above this down candle on the 5 minute time frame. I'm gonna see the next candle open up, tap the open of this candle, and start to expand if we're gonna go for this out here. Let's see trade down into the body of this down candle. Start to expand for buy side there. All right, so this candle has done what we wanted to see. Now my thought process here is, if you look at the nature of this down candle, right? So where is this down candle forms underneath this look here. So in this down candle, institutions are buying into the decline, right? That's the theory of block trading, right? Block trading is institutions essentially pairing their orders against liquidity. We've seen displacement from there. This candle trades down into this down candle. This is a propulsion block. Now this down candle trades down again into this down candle. So all that's going on here is just accumulation. All right. So we're accumulating. So that's where I'm reading price right now. If we're gonna see big range expansion for London session going into for New York session going into London close session, it has to start expanding, right? We have to start seeing range expansion for buy side liquidity. So that's why I'm expecting to see this candle. I want to see the candle start to create inefficiencies, just like we have this small fair value gap here. So I like to see the market create this fair value gap, not trade down into the fair value gap, continue to trade higher, create some fair value gap somewhere around here, maybe institutional financial drill there, and then expand higher. So that's what I'm looking for right now. So I'm gauging prices willingness to wanna expand there. Le complément de le complément le complément Now the question is, if we eventually trade down here, I again, because of what we've seen so far between Tuesday going into Wednesday, I'm not so confident about price's willingness wanna continue to expand for sell side, right? So that's where we're getting to the gray area. So if dollar finally expands below here, I don't know how far we're gonna go lower, right? So because of what we've seen so far, usually if the market is gonna reach for a sell side like this, it should not do all of this. Okay, so and the reason why is because the safest thing to do is always to trade what you can currently see, and what we can currently see is second short profile. All right, so why would price want to leave this range and go for a sell side is the question you're asking yourself. All right, so you want to see price do it, and that will be a pleasant surprise versus pushing it, trying to see the market trade out here, and the market does not do so, and now you're stuck, you're pissed off. We can see treasuries just absolutely rallying. All right, so treasuries are just screaming in one direction. You can see that in treasuries, which is what I like to see. All right, let's see gold. Look at gold. Gold is absolutely. USD catch the most likely got in. Yeah, you can see USD cat has cleared out the sell side, and then we have our friends. Our friends, which did not show that much willingness, want to be weak. Now those ones are struggling. All right, our shitty friends, which is I still think is gonna go for buy side. Well, let's see when the next economic data is, which is 9:45. I want to see the market expand, be trading up here prior to any of these two. So we have two more. And we have one later on. So prior to any of these two, I want to see the market trading up there. It's just stalling. I don't like the way it is stalling. I don't like the way it is stalling compared to bonds and gold. Gold is doing exactly what I want to see gold do. So for those of you guys who trade gold, the target objective I gave you guys at the start of the week, which is this eye here, price already has met that. And the criteria was not to lose this bullshit block. So price has met that, and I mentioned target 2 would be the rejection block here. But for euro, we have not got into our target objective yet. It is slow compared to the other assets. And if euro does end up going back below the sell side because of how sluggish it is, I don't think I'm gonna go back in trying to get a range to trade. All right, it would just be really frustrating week. I've had 2 break-even trade, so it will make it 3 on it, 3 break-even trades and 1 full-on loss from the live stream. And then maybe a partial loss on the pyramid position. So what I'm looking at with pound, I know we have this bullshit block here, and this is a propulsion block. But what I'm more interested in is this fair value gap here. So I wanted to see that fair value gap act as a buffer for shorts and send the market higher for this bias liquidity. Alright, so that's what I wanted to see on pound. And also the reason why we're closing like this, I think, is because we're reaching the tail end of this 1 hour candlestick closure. So let's see. I would rather much have preferred this candle closed at the high. That to me would be solid for longs. That would mean the next candle would see very minimal retracement lower and just start to expand higher. So whenever you see the market make a turning point and it closes solidly, you can see this one as an example. Closes solidly, and look at what follows through. Look at all of the upside. Let's see if we can find another one. Look at this one, for example. When it closes, when candlestick close very close to the highs or lows, that usually is a very powerful indication, especially if it's coming from a PD area. That usually is a very powerful indication of sponsorship. Alright, so new thing, just taught you guys. I just taught you guys a new thing on the live stream. So if this candle closes very close to its high, that to me is indication of what to expect on the next candle. If it closes like this, then I can expect the next candle to trade deeper. If it's still going to be bullish, trade deeper into the inefficiency and continue to rally. But I think drawn liquidity, that's what I can see so far. This is where pound wants to go up into. So I don't need to sit on the live stream for 5 hours just to talk about drawn liquidity. Right? So I think this is where it wants to go to. It is just frustrating trying to get up there. Let's see euro on the 1 hour time frame. Absolutely annoying. Absolutely annoying. Just so I'm probably gonna close out the live stream soon, because honestly, there really is nothing else to really talk about. If we end up closing, you can see no subsequent candles close above this down candle. So if any of the subsequent 15-minute candle closes above this down candle, this becomes a mitigation block, and this will be a market maker model. So this will become a mitigation block, and you want to see the market rally from there. All right, so it looks something like this. Something like that. Oh, I should have freaking. Good. All right. So there's not a lot else to talk about with euro. You already know what I'm looking for. I've spent the last 1 hour breaking down every piece of price action with this one, and explaining what we're looking for. So ultimate drawn liquidity is the initial high of the week, which is Tuesday. But up here is where you want to look to start scaling off. And I also mentioned that if any subsequent 15-minute candle, maybe this one, if we don't trade back below the low of this candle, or the next 15-minute candle, if we can close above this up candle, that would be a mitigation block. That is confirmation of a market maker buy model. You can add in more and scale into this high up here, right? But the main thing here is do not fear adding into your winning trades. That's the main point I'm trying to drive across. And also be very quick to cut off your losing trades. So, point made. You guys will have a wonderful afternoon. Obviously, I'm going to give you guys feedback on the trade depending on how it goes with a video or a commentary on Discord. In the meantime, you guys all trade safe, and I will talk to you.